Hey everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 9th of April, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the second week of April. Let's begin with spot gold, where relatively for gold, it's a very tight range and consolidating here. Still hanging around the 50 pip retracement of this move back down. After previous week, it did dip down to test the 62 pip retracement. So that was the next support level along with the 1900, but this week it did not dip lower, much lower below the 50 pip retracement, and did not even hit the 1950. So it's really boxed in a relatively tight range for spot gold of only 300 or so pips. Let's insert this box down here. So yeah, it needs to break out of this area, this rectangle, break out higher above 1950, and perhaps retest this level, this previous swing high. If it does attempt to test this area, watch out for any rejection and retracement, significant retracement lower. This support zone is still very safe at 1950, along with the 62 pip. Sorry, 1900. At the 62 pip is at 1891. So it does break out higher, which looks like it's trying to. It's may be blocked here, and then tumble its way back down into this support level, or perhaps when the 55 is coming up towards the 50 pip, and it does break through. And yes, this area will be a strong zone for support. And this previous swing high here, this wick area, that's at 1974. Perhaps let's mark this level here, 1974.41. Let's make this a bit bigger as well. Okay. So yes, last week was quite disappointing. It's just ranging in this box area, and did not even test the daily 55 EMA. We go to the 4-hour time frame, and here, yes, you can see how tight it has been. Let's go to the weekly time frame, and yes, you can see smaller and smaller range, even smaller body than the previous week and the week before that. So it's converging. We just look at the candle bodies, it's converging into a narrow range. It's around me here. So it needs to break out soon. Let's hope it's next week with these news coming up, CPI, PPI, and the retail sales figures. So there could be some trigger to move it one way or the other. Okay, let's also take a quick look at the US dollar index, the DXY, and compare that to spot gold, which I think US dollar has better success there. So here's the DXY, and from the start of the week, it has climb up from this 21 fib retracement here, and broke through the resistance as previous swing high, and punched through just to hit the 100 round figure before pulling back. That was just yesterday on Friday. So it has pushed through to finally reach a round figure. So this area now is going to be support, and let's see here, we'll mark the resistance later, but for now, let's use this as support zone. $99 is also going to be support. Let's make it a darker. Can remove this one here. And if let's move this Fibonacci to a reversal from this swing low to this swing high, and yes, it has reached 138 fib retracement here, right at the 100. So it pulls back into this swing low. That's the support level. And below that, let's remove this here. So 99 is right there with the 78.6 retracement. So remove this one here. Okay. So we'll see whether this is a strong retracement signal or a reversal signal with this shooting star or almost a doji, where it could just drift down and come back up to retest the 100 again before retracing further back down to 99. So we'll see over the first half of next week whether it's going to attempt to retest 100 and whether it's going to break through the 100. We shall see. Because above that, there's the 162 fib extension. So at the 100 and 100.35 area. And let's mark this up here as resistance. Now, if we also align it with this fib from the more recent swing low, or not a recent swing low, but a past swing low from October of last year, we had initially used this continuation fib for a while, and it has a confluence with this reversal fib, right, to that same level as well. So this is a 200 fib extension, so that's double of this move. So let's see whether there's any opportunity for it to break through this 100 and just to hit the this 162 fib extension as well, confluence with this 200 fib extension, and that's at the 135, 100.35 level. All right. And below that, it's also further another support, this area below the 99 as well. Okay. All right, so let's move back to the other pairs. Let's move on to the US dollar against Japanese yen, where it has continued to strengthen after a significant retracement the previous week, and been climbing back up steadily from the start of the week, back up above the 21 fib retracement, and broke through the resistance there at the round figure of 123, and eventually on Friday did manage to climb up above 124, but has not retested the swing high at the 125 yet. So this now is going to be support. Let's move the resistance zone up higher. That's a major resistance zone area. Let's identify this as a, let's make it a solid zone of support, and below that, if it drifts lower, then okay, that's the 38 fib retracement, along with the $121. Here is going to be a major support level. And if I add the weekly pivot for last week, and you can see that it Friday it managed to hit the weekly R1 pivot precisely before pulling back. If we go to the 4-hour time frame, add it to the 4-hour time frame, you can see that it hit there precisely. Let's one more here, the 4-hour, and right there. After hitting it, closed as a doji and starting to retrace, but it was late. It's a late move just to test that level. Okay. So let's see if this is the end of this recent rally and the start of a consolidation phase. And if it does consolidate, then it's still a wide range to consolidate between a couple of hundred pip levels. Okay, in fact, yeah, I should probably add another one up here at this 00 as well. At the 122. Let's take a look on the weekly time frame. And that was the continuation move up, but temporary stop by the weekly one pivot. So we'll see whether it's time for consolidation. It's still a pretty good area to consolidate within. Right, so it could just drift lower and consolidate around the 123 round figure. Oh, sorry, the 124. And if it does break down, then there is still support below that. Okay, so we'll see if these news may trigger either continuation move or a bigger, more significant retracement. But it seems like it has reached its significant highs, multi-year highs for now. Okay, so but the yen pairs are still quite interesting. I've been trading the yen pairs quite a bit as well. So euro yen or the pound yen. Euro yen has been quite active lately. Okay, so do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.